Hey guys, welcome to today's stream. Before we get started, I'd just like to do an audio check. So depending on what platform you're watching this on, if somebody could confirm that they can see myself, see Aatu, and hear me talking, that would be absolutely fantastic. And meanwhile, I'm just going to check on the YouTubes just to make sure the streams are working correctly. So bear with me for 30 seconds or so. Perfect. It looks like we're all good. Can hear and see you. Fantastic. Fantastic. We're getting a lot of confirmations that they can hear and see us. So we will jump straight into the session. Now, for the guys who are watching this as a recording, it will be uploaded to X and YouTube if you can't stay around for the whole session or if you have to dip in and out. So please don't feel like you're going to be missing out. The whole session will be on our X account on both Classic and Zero and also on both of our YouTube channels. So we're going to jump straight in. I'm actually not going to be here for the session. I'll be in the comments section. So if you guys have any comments as we go through the session, please just put them, again, whichever platform that you're watching it on, Instagram, YouTube, or X, just post a comment and I'll be the one coming back to you. And then what we're going to do is we're going to potentially schedule in a live session where we go over all these questions with Aatu again. As today, Aatu is a trader and he is going to potentially be trading and therefore his focus will be there. So without further ado, guys, I would love to introduce you to Aatu, the trader behind THA.
Yeah, thanks for having us, Kieran. Thanks for the intro. I really hope this will be interesting, kind of how professional prepares for an event. And so kind of for the agenda today, we'll walk you through how NFP gets priced in, the market context, and outline our approach to trading the NFP in a sense. There's many ways, obviously, to skin the cat here, but that's our approach. I've traded personally like NFP probably like 60 times, watched it many times more. So hopefully there will be some nuggets of information here. But good, I won't be answering questions. So we might, like Kieran said, we might do like a debrief session afterward. 10 minutes into the event, I will put us on mute in preparation, as obviously I will want to be focusing on execution before the event. Now, kind of setting the expectation a little bit, historically speaking, we trade NFP on average 4 to 5 times a year. So we are predators, not scavengers. What that means is if there is volatility, if there's chance for momentum and context aligns, that's where we want to trade. In news trading, the edge comes from knowing when not to trade and then going big when there's actually opportunities. So don't expect us to spill every secret, but nevertheless, we think there will be quite a bit of value here. So yeah, I might go through things at the fast pace. So if you really want to learn, I recommend watching the stream again. I think this thing will be posted on YouTube, so you can rewatch and maybe take notes. So I'll be using mainly free research in this case, so you can kind of reverse engineer our process a bit as well on some cases. So yeah, so let's get started. I will bring up the screen and let's pull the good old Forex factory calendar to start with. Can everyone see the screen, by the way? I guess so. So yeah, obviously NFP is the most important labor markets data, and probably at the moment most important data from the US. We still use the Forex factory calendar. It's still very usable. That being said, what's really good about it, you can see kind of the expectation for the NFP, and then you can see the expected number for the unemployment rate and for the wages as well. There's few caveats with this though. Namely, for example, today since we had yesterday, we had quite weak ADP. The Bloomberg Whisper number is actually a little bit below 111K. It's around 100,000. So something you might want to note down. So that's the actual consensus number for this NFP. So obviously that's what the market first pays attention to. Now, this is something that many people miss, though, with like all focus on the headline, that you also have the revisions released on parallel with the NFP, and the revisions can also drive the market reaction. It's not only about the headline and unemployment rate and average hourly earnings. So here you can see kind of that last time this shows only 1 month revisions, but you are going to get 2 month revisions to the NFP. So I can show, for example, the market reaction to the last NFP. You had a positive number, but minus 90K revisions, and wages were obviously positive as well. So the dollar was slightly bought initially, and then the market reaction went off the revisions. It was then sold. So that's why you really need to pay attention to the revisions as well in this case. So of course the unemployment rate is also very important for the Fed. The main channel how NFP impacts FX market is obviously the Fed, also growth channel, but from Fed's perspective at the moment, NFP is relatively important in the sense that they forecast unemployment rate in the US at 4.5% by the end of the year, so slightly up. But that would be definitely news if that went higher to 4.5% or something like that this time. So something to track of. Also, the average hourly earnings, depending on where we are in market regime or cycle, they can be important, but we don't think it's that important today at the moment. There's not as much attention to the earnings part as there is to the general number and the unemployment rate right now. We'll also have unemployment claims. So there's going to be a lot of data today. And we also have ISM services after. So there's plenty of event risk. But in terms of the unemployment claims, if there is actually something meaningful deviation on the NFP, we definitely expect market to probably ignore the unemployment claims. That being said, it's still important to track it. Let's say if there's a 15K deviation, that's a good sort of rule of thumb that could cause a market reaction. Another thing on the unemployment claims is that the trend is important here. So obviously they've been trending slightly up lately, but overall staying in a broad range. So don't expect the unemployment claims to drive the market reaction that much. It will be mainly about the headline, non-farm employment change, and the unemployment rate and revisions, 2 month revisions to the past numbers. All right. We also have the Trump's big beautiful bill vote. I'm not sure if it's passed already, but the probabilities stand around 85-90%. That's obviously been a dollar negative, stock market positive. So increased fiscal deficits are kind of, if we take a look at the charts at the moment, they are not a great thing for the dollar. But from a growth perspective, the bill is obviously stocks are going higher. They like that. So that's something to be a factor. We don't think that, well, in a case that it was now voted down, I would expect some dollar upside definitely, but that's like a tail risk we are monitoring into this event. We don't think it will cause that much market reaction. Then there will be obviously the Trump factor always. You need to be cognizant of headline risk on this Trump era. That being said, the sort of deadline for trade deals is 9th of July, and we think the focus today will be more on the bill than on trade. So yeah, that leaves kind of today's market reaction to hinge on the NFP and then of course the ISM services right after. Now the ISM hasn't been that important lately, but it can still cause volatility. So the only clean window to price the NFP is really the 90 minutes after the ISM. So if you trade, but there's still ways to trade it afterwards. Definitely like the full interpretation of both the NFP and the ISM and what's been happening today. Now let's take a look at the macro contexts. Obviously, we have the meaningful downtrend on the dollar, but from an event trading perspective, what's happened on the past week, past few days is usually the most important thing. And we had the resolution to the Iran crisis, which was a dollar negative, as oil down, inflation down, and then the big headlines past week has been about Trump aggressively talking against Powell. Obviously, he wants to get Powell out at the Fed chair so that the Fed would cut interest rates more aggressively. So the rates market has actually priced in several rate cuts more into next year. I think Powell's term expires next year, so it's not expected for him to continue. That's a dollar negative. Powell is extremely competitive Fed chair, and I would expect Trump to nominate a chair that kind of does what he wants. That being said, for the moment, for the time being, the odds in poly market for the chances for Trump removing Powell in 25, which would be a very dollar negative from a trust perspective, stand at 16%. I know that many people talk about against poly market because the volumes are small here. I think if you put, let's say, 50 people in a room betting, you get pretty rough, idea of the real odds, even though the volumes are small. So I would estimate that I would kind of trust these odds on this one. But yeah, if Powell is sacked earlier, that's a negative for dollar. Definitely, overall, it's a negative for dollar. That it's becoming increasingly clear that Powell won't continue after his after May. So yeah, let's have a look at sort of what kind of. We should talk about the Fed a little bit because that's always important. How does this NFP? Because usually if you see NFPs like past, like this year, NFP hasn't caused that large market reactions because you haven't had numbers that would be important for the Fed. The Fed hasn't moved this year. This time we actually have a chance, if this number comes out as weak, that the Fed odds for rate cut in July could increase. So again, this week we already had some Fed commentary from Powell that July is not off the table. So that has caused the sort of odds for July cut to increase. Now again, that's a dollar negative. So also Waller, the one of the more influential Fed members, said that we don't want to wait until the job market tanks before we start cutting the policy rate. So if the unemployment rate rises today and we see a low number on the non-farms, we would expect the pricing for July cut increase rapidly. But that being said, the market reaction is not so clear cut always that you would assume by the textbook that dollar goes down, stocks go down. But especially when it comes to the stock market, now we are not going to trade stocks because we focus on where we have the most edge, which is in FX, and we are FX only strategy. But in the stock markets, it's still important to know what's going on with the stock markets because correlations could cause, even FX positions unravel a little bit. So So in the stock markets, what you kind of could expect if the number is relatively weak and leads to increased July pricing, the stocks might just sort of go down a little bit and then just keep rallying, obviously with the very strong upward trend. We wouldn't expect even a bad number to change this short-term trend. But yeah, we wouldn't expect it to get faded away immediately either. Now, going back to the dollar index, yeah, obviously the dollar is weak, but what instrument should you decide on? You know, if you want to, if there's a strong number or weak number, we think that we like the yen by far the most. It's the most neutral instrument. So if there is a very strong number, we don't have a strong conviction on that, but if there's a very strong number, we would expect some upside on USD yen, a little bit of continuation. That being said, because the strong number doesn't make such a big difference to Fed, right? The July odds can only decline to, let's say, 10%, 5%. We wouldn't expect that much sort of continuation on the dollar. The drivers for dollar overall remain quite negative, and we wouldn't expect, for example, the full cut from September to priced out because of the NFP this time. That being said, that leaves us that a dovish number should lead to larger increase on the July cut odds and potentially more dollar downside. But it needs to be quite weak, though. For us to have conviction, it needs to be quite weak. There needs to be alignment, meaning that the revisions need to align, unemployment needs to align, in a sense that that's when we could see more serious moves. Kind of what the market has been monitoring for the past 6 months has been, alongside obviously tariffs being the biggest driver, but also the labor market. When does it start to weaken? And that hasn't really started. So yeah, that's kind of what we think is needed for example, for yen to go up against the dollar in a sustained way. The yen positioning is it's probably one of the most popular bets at the moment. It's very extended in the sense that people really love the USD yen short overall. We don't think that's a problem if the number comes out as a very weak. Oftentimes, positioning is an indicator. For example, during many up and down trends on the yen, positioning was very extended all the time, but the trend kept going. So it can be a bit misleading. That being said, if this report is as usual, we kind of think that it could still stay on the range. Now, one final very important thing: implied volatilities. How important implied volatilities are priced in at 120 pips roughly today. So that means that overall market does not expect that large moves compared to overall the sort of range in the yen. I think we had a 120 pip move earlier in the week. So even though we have two relatively big events, we don't have that much volatility pricing. Yeah. So what everyone wants to know, obviously, what kind of trades are we looking for here? Knowing kind of the context, where do we have? I'm not going to outline the full execution details, obviously, because that's our edge. But the trades that we are kind of looking at the high level are, there's 3 different kinds of trades. So let's use whiteboard. Let's see if I can pull this up. Hopefully people can see this. So the first trade is sort of a big big downside deviation from forecast with alignment across the board, what I talked about. It's a relatively aggressive trade. That's a higher conviction. Again, the entry thresholds, then specific number thresholds. That information is proprietary. That's I'm not going to share that, but you get the rough idea of the type of event that you kind of what you are. So you would expect a move in the yen like this on the momentum trade. Then you have the revisions trade. The revisions trade is a bit tougher to trade with size, given we have 20 plus million AUM. That's a trade that might be interesting for someone with smaller accounts. So let's say that the number is weak and the revisions are to the upside. We might see a blip lower in the USD yen, which should be mean reverted then. That's relatively frequent occurrence in the past 15 NFPs also, this kind of market reaction. And then we have a mean reversion bias trade, use NFP and ISM volatility to enter a pre-existing macro setup. Strong NFP is not a game changer at this stage, so you might use it as a liquidity to get into the USD short. So if you look at Dixie, for example, now we wouldn't fade a strong NFP instantly. We would definitely wait until the ISM services is out, kind of the information is out, but there's a relatively large level here, for example, 90 points away in the USD index. The better place to fade this, if it hits that level, might be euro dollar than the USD yen, because of the obviously strong uptrend on the euro dollar, and it kind of has different mechanics than USD yen. So that's another trade that we are monitoring in this case for today. So final recap. Whisper number is 100K, not 111K. Implied volatility is around 120 pips, which is not that large, but of course, if we see a big deviation from expected on the numbers, we are going to see more volatility likely more volatility than that. Watch for the revisions. And I think there should be a free way to get them. We use Thomson Reuters to get them, but there should be a free way to get them as well. They are very important. So Fed rate pricing is Fed rate pricing is likelier to move towards a July cut on a weak number. That's going to cause more market reaction to the pricing than a strong number. Obviously, be cognizant of the ISM risk as well. And then instrument that we like to play this for very weak numbers is the USD yen. And if we are mean reverting, we like to monitor the overall Dixie level here at 98 and potentially time based of that positions on Euro USD. Now, finally, for those that are already positioned into the NFP, June has been historically relatively hot month for NFP. So relatively to consensus dating back to 2015, I think 7 out of 10 times it has actually been a beat. Also, like on the ADP, some people think that the ADP predicts the NFP. It doesn't have much predictive value, and that's kind of interesting on the NFP or ADP that usually it's a fade. You rarely see continued moves to ADP. But that's pretty much it in terms of the content. I think we are done like 20 minutes early. I mean 10 minutes early. I think so in terms of how you will see our trading, we will you will see our platform on the yen for the initial trading, and then if there's no trading, if there's no large sort of scenario for us, then we will probably do a debrief, and then we will stop the stream. So let's see. But now we may. I'll go on mute in preparation, and we'll pick up after. All right. Hopefully you could see sort of the screen. This is close to a bullish scenario in the sense that the revisions were upward 150k number, unemployment rate drops. We have a 110 pip move on the USD yen. Now we'll see. We want to see the price action. We don't want to go long USD yen here. So we'll see about the price action afterward if we want to take the mean reversion trade. So yeah. It's contingent obviously on the ISM as well, how it comes out. But yeah, you have a pretty big deviation across the board. Overall, of course, based on that, you have a case for going long on the USD. But again, as we said, we don't think it makes a big difference to the overall picture to the Fed. So we'll see. We'll see how it turns out. We don't feel like we have a strong edge here going like long on the pair. But yeah, so we will be monitoring the sort of post ISM reaction and potentially trading that, but that won't be covered by the stream. So yeah, I guess good luck to everyone trading, and yeah, we'll see about the debriefing session later.
Revisiot ei ole isoja. 16 000, mutta positiivista.
Joo. Just monitoring through the comments. I will be answering questions later. Obviously, if you want to track a mean reversion trade, probably USD yen is not the best place to trade that. So yeah. Anyways, good luck everyone, and we'll see you later.